Good morning and welcome to Tuesday's Table Talk with Notary Know-How. I'm Melissa Watts.
I'm Dina Spinks.
And
And
today,
I'm Jim.
I was saying, today we have Jim Corey with Fox Mortgage. Welcome, Jim.
Well, good. It's great to be here.
Welcome.
So I have been listening to WDJC radio station since the 80s. And somewhere around in 1992, I began to hear commercials on WDJC for Fox Mortgage. And Jim Corey and Fox Mortgage have the longest running advertising in WDJC history. And
right.
They are quick as a fox.
That's right.
I got that part right. So it's such a pleasure to put a face with a voice that I have heard since 1992.
Well, that's great. Like they say, I have a face for radio.
Well, in the constantly changing realm of real estate, being proactive is essential for vendors who are catering to homeowners. Okay.
Mm-hmm.
With the rise in mortgage rates, it's vital to grasp their impact on notaries and title agencies and explore how these professionals can adjust to enhance client services. This is per an article by LinkedIn.com. The impact of 8% mortgage rates. With the average 30-year fixed mortgage rate at 8%, notaries entitled, and this article is from October of 2023, so the rate may be different today. Mm-hmm. But according to this article, with the average 30-year fixed mortgage rate at 8%, notaries and title agencies face unique challenges. There are reduced transaction volumes. Higher rates can deter potential buyers from entering the market. This can result in reduced number of real estate transactions, affecting the demand for notarial and title services. Mm-hmm. Increased due diligence. Rising property prices may lead to more complex transactions, requiring title agencies to conduct thorough searches and address any issues diligently. And market uncertainty. Higher rates can introduce market uncertainty, leading to delays in transactions. Notaries and title agencies must be prepared for potential delays and provide clear communication to clients.
That's right.
So what do you think about that, Jim?
Well, I have to agree with all of it. I don't think we're going to see the 8% rate, hopefully, that they're talking about, but we definitely did see the 7s. And then we're down a little bit below that, but we're still at the high right there. Mm-hmm. We at Fox, we're not quite that high, so that's one good thing for us. But it has slowed down volume, obviously, and you mentioned something about the difficult properties. That is something we have noticed, that some of the people that now have the bigger problems, or we are facing that, and we're working through title issues, but we get it done. But you do have some delays.
Yeah. And even though you have those delays, I know you're quick as a fox, Jim.
Yeah, right. Yeah.
So, we were talking about the interest rates, and in our previous conversation leading to this interview about, are they going to go up? Are they going to go down? And I've printed out a lot of things from the internet. And I want to tell you something. This one says it's going to stay the same. This one says it's going up. This one says it's going down. I think pretty much all of them, because I was looking at, and I got some information from Fannie Mae, Freddie Mac, the National Association of Realtors, Mortgage Bankers Association, and 5 or 6 others. And pretty much what they're saying is it looks like it's going to stay between 6 and 7% for 2024. And we were talking about when Dina was reading that earlier about it affecting the volume of business, and you commented on, yes, you had seen that. If these interest rates continue to drop between 6 and 7%, do you see now an increase of not just home buying, but refinancing as well?
Yeah, let's cover the home buying because we
Okay.
are really, there's a phrase that we've been using in advertising quite a bit. Marry the house, date the rate. And I didn't come up with it, but it's just so true. If you marry the house,
Mm-hmm.
because housing pricing, nobody is saying it's coming down. So if you don't get into that house now, then the chances are the price is going to be higher in the future. And it doesn't matter really what rates do as far as going down. Now you're paying more because you procrastinated and didn't get the house when you could have. I hope that
Right.
makes sense. So when you
Yes.
date the rate, go ahead and get in it now, even if it's 6.5%, 7%. Then when it does come down for, let's just put most refinances run about $6,000. So uh, in closing cost. So
Mm-hmm.
you can get that, 0.5% may be enough to take care of that for the next, maybe 3/4 of a rate, depends on your loan size. But on a big loan, 1/4 of a rate would be worth refinancing.
Mm-hmm.
So go ahead, marry that house, get into it. Now, to address refinances, unless there's a real good reason, which would be cash out, you need some cash for this, in other words, if you've got an existing good rate, then my advice is to go get a second mortgage somewhere. And credit unions are very good at this. They're better than we are. I tell folks that we get calls all the time for equity lines. We have them, but Avadian credit unions, just say credit unions, they're going to beat us. And so why not go there? You'll do better.
Gotcha.
So if you're looking for cash and you got a low rate. Now, if you got a mediocre rate, let's say you got a 6% rate, then you might want to come to me for a cash out refinance,
Okay.
or someone like me.
Mm-hmm.
Did I answer your question?
Oh, yes. Uh-huh.
Jim, can you give us your take on how these mortgage rates are going to affect the industry in 2024?
Mm-hmm.
Yeah, I honestly think maybe was it think or hope that let me tell you what it's all tied to, so we don't get off the track here. It's
Right.
all tied to whatever's going on with inflation at this point. So if inflation was under control and the Feds lowered those that prime lending, then our
Yeah.
rates would probably follow suit. And they don't normally all the time, but they would. We think they would in this case. But are we looking for drastic rates like 1% or so? No, we're talking about maybe 1/4 of a rate. I think you like we was discussing earlier. I think they're going to be pretty much steady because inflation seems to be steady. It's not going up; it doesn't seem to be going down. So that's really your key. To answer your question is, if you knew what inflation was going to do, you'd know what rates were going to do.
Right.
Mm-hmm.
I was actually looking at an article by Forbes, and it said over the past 2 years, mortgage rates have skyrocketed to their highest level in decades amid the
Yeah.
Fed's efforts to tame inflation through
Mhm.
aggressive interest rate policy actions. Rates have recently begun to recede, albeit sluggishly, due
Right.
partly to the Fed's rate hike pauses. And the other thing that Mr. Powell said is that hopefully we want more confidence that inflation will be coming down substantially towards 2%. Do you see that happening? I know one thing we talked
Yeah.
about the other day was what's going to happen in November
Yeah.
affecting
Well,
things.
right. And that traditionally is that, election time, you try to make things better so you can get the votes and make you look better. So whatever. Although I think the Feds say they have no correlation there. I don't know what I'm not a conspiracist, but who knows? Who knows what really goes on? But either way, I sort of look for maybe one rate cut between now and election time.
You see
And
that
hopefully
coming down to, do you see that coming down to 2%?
I don't know. I don't know
Well,
if
maybe
you
there's
cut
hope.
yeah, it could go the other way. Who knows? I just don't know. We'll just have to wait and see. I wish I knew. This is a good time to say this because I've been saying it for years. I used to ask the Lord to tell me what what rates were doing. And because once upon a time, if I knew the rates were going up, I could lock a person. If they were going down, I wouldn't lock them. I could make money. Now that's sort of out. But during that time, I'd say, Lord, you know what rates are going to do. Tell me. And he
Mm-hmm.
never does tell me. He hasn't told me yet. He
Yes,
just and he knows, but he just will not
Mm-hmm.
tell. So you
Well,
just got to do your best and see what happens.
I sort of threw in an extra question there. So let me ask you specifically about how all of this we've been talking about, whether
Mhm.
rates go up or whether they come down, whether inflation goes up or whether it comes down,
Right.
about how this affects notary loan signing agents. And in your opinion, how does a properly trained notary loan signing agent get work with a mortgage company such as yourself or a title company?
Yeah. Well, no, that is an excellent question. I guess I don't know about others, but we have relationships with title companies that we deal with,
Mhm.
and then we have a few traveling notaries, which one is my daughter, Melody. She does that. And that's how we handle ours. Then most purchase transactions, you're going to be needing dealing with the real estate agent because, as you know, the mortgage company has very little say so in it. It's usually like, well, we want to go over here to our friends, and rightly so. They develop relationships are important, and
Yes.
so your agents would be the ones that you would have to not qualify. What am I looking at forward? You'd have to go after. I guess that's the word. It would be
Make those connections.
right. Yes. We on a refi, then we're up to us, and then also we're seeing some virtual stuff come in, which we haven't gotten to it yet, but that could affect you on the closing side. I don't think we can even do it in Alabama yet, but I do see it nationwide. Virtual closings, national closings. That's a trend. You would want to get registered with somebody that would let you, do their closings for them. And right
Right.
now, I don't even know how to tell you, but I just see that we're not doing it in Alabama, but I do see it in other
Not
states.
yet. Mhm.
Yeah.
Not yet.
Okay. I hope, go ahead.
Well, Melissa kind of piggybacked, or I guess I'm piggybacking on what Melissa just said, because that was my next question about, could you tell us the best way for NSLAs or NLSAs to network with mortgage companies and title companies? So you're saying to talk to the real estate agents rather than going direct to the mortgage companies or the title companies and trying to network with them. It's best for us to reach out to the actual real estate agent.
Mhm.
I think that's the business that especially on purchases. Exactly. Now on refinances, then sure, call on the mortgage companies and develop those relationships. Do good work, and most notaries. I've never had a notary that. I'm just thinking, I don't think I've ever had a problem with a notary anywhere. So in 30 something years, so y'all do good work.
Thank you.
Thank
I
you.
do.
That's good to know.
I do want to speak to my own experience
Okay.
regarding that. When I first started out as a notary loan signing agent, I thought, oh my goodness, I'd signed up for all of these companies and everything, and I kept waiting for my phone to go off. And I would even have phantom vibrations, like when I was exercising or walking my dog, and I'd pull my phone out. Nope, nobody called me. Nope, that wasn't a loan signing. It was just a message, and everything. And so I decided to be proactive, and I made what I called a title company packet of information. I had my commission, my resume, and copies, all those things that they ask you for, your copies of your bond and that kind of thing, all in this packet of information. And I drove around, I made a list of the title companies in my area, and I drove around and I knocked on some doors. And most people would take it and say, well, thank you so much. We have our own notaries and we have a notary here and everything. We appreciate it so much, but we'll keep you in mind. And then I had another one. I walked in and the lady was quite rude and dismissive and said, we don't. And I said, well, can I? No. And I was like, but I want to tell you something. One company I went in, I was going to leave my information with, and I had already been knocking on doors all day long. And they said, well, very nice. They said, well, we really appreciate it, but we have a notary in office that usually handles all of our things, and they are mobile so that they can
Mhm.
do that. And I thanked them. And for some reason, I decided not to leave the packet of information with them because I thought, you know, well, they're not going to call me anyway. I may as well hang on to my stuff, and give
Yeah.
it to somebody who might call me. And I went and I got in my car, and all of a sudden there was this on my car window. And I turned around and the lady said, let me go ahead and keep that information. I want to tell you something. That was my very first loan signing.
All
About
right.
about a week later, I got a phone call from them, and she said, and I just acted like, oh, I've been doing this forever, and I would, Dina knows
That's a
me
good
well
thing.
enough to know that I tried to smooth all that over. But yeah, that was actually my very first loan signing. So,
Right.
um, can this business is all about relationships and everything, and getting yourself out there and marketing yourself and making those connections.
Absolutely. That is it. It is. So,
Well,
so let's all pray those rates come down and we
yes.
get more houses going and we'll see if we can't stir up a lot of business, make some money.
Well, Jim, is there anything else that you would like to add about what we have been discussing here today?
No, I think we've covered it. Done a
Okay.
great job.
Well, thank you. And we just wanted to mention to the notary loan signing agents out there, business is slow right now, because the rates are higher. So you're not getting as many appointments. So during this slump, how are you using your time?
Yes.
Okay. Are you making sure that you are ready? Are you sitting at home in your pajamas hoping that there are more loan signings? Or are you getting up and getting dressed and getting ready and prepared every
Yes.
single day, expecting that phone to ring? Because you never know when that phone is going to ring. Sometimes you get 4 hours notice, 8 hours notice, a day's notice. Sometimes you get a 1 hour notice. And you
Right.
can't take those appointments if you are not up, dressed, ready, and prepared. So, are you
Absolutely.
using your time wisely in this slump?
Yes.
Are you taking advantage of the extra free time by gaining more knowledge about your industry and services that you can offer?
Yes.
How's your business marketing right now? Do you need to update your website because you offer more services? You're learning more things during the slump. You need to update your business brochures and your business cards and your marketing flyers. We do offer several digital marketing materials on our
Mhm.
website, just FYI. So, do you
Yeah.
need to update any of your equipment or notary supplies? Now
Yes.
is a good time to look at those things during this slump. So, when the interest rates come down, you are prepared to hit the road and take those signings. And also, one thing I want to ask you is look at your errors and omissions insurance.
Yes.
Many notaries are not aware that there is standard errors and omissions insurance, and then there is notary loan signing agent errors and omissions insurance that covers many things that your regular errors and omissions insurance does not cover.
Hmm.
So these are all things that we want you to consider and look at during this slow time of loan signings.
Mhm. And I can speak to what she was talking about your errors and omissions insurance. I am a licensed insurance producer in the state of Alabama, and we do provide errors and omissions insurance, notary loan signing errors and omissions insurance, and notary bonds on our website. But the difference is this: your errors and omissions insurance only covers the pages that you notarize. Now, as a notary loan signing agent, if you already are, if you're not, we have a course dropping on June the 1st about becoming a notary loan signing agent. but you will learn in this process that there are numerous documents, and Jim can attest to this. There are numerous documents throughout a loan signing packet that do not require notarization. However, they do require the signer to sign. And so those types of documents are not covered under your regular errors and omissions insurance. They're only covered if you have notary loan signing agent insurance. And so that's the difference.
It's good information.
Yeah.
Thank you, Melissa, so much.
Mhm.
Jim, we want to thank you for agreeing to do an interview for Notary Know-How's Tuesday Table Talk. We want to interview leaders in the industry to better inform our notary publics about the current issues and best practices for performing their notarial acts. You are definitely a wealth of knowledge on this topic, and we thank you so very much.
Well, it's
To
been
our
a pleasure.
listeners, we've enjoyed it. To our listeners, please make sure you are signed up for our email subscription list to stay in the loop on the latest. We have many exciting things coming up. Also, be sure to go to notaryknowhow.org to see all the wonderful things that we offer on our website, such as background screening, notary supplies, courses, mentoring sessions, and more. Thank you for joining us today for this edition of Tuesday Table Talk. Goodbye, everyone.
Bye-bye. Thank you for joining us.
Lord bless.